Hello guys, welcome back again. I know it's been a week, I haven't uploaded anything yet, but I was just a little busy. Man, what a week. It was some crazy week on trading. Uh, Today, I just want to mention some of the mistakes that I've done, and just to share them with you so you won't have to do them again. I want to go a little bit over the market and what I think from here and what I see what's going on and a couple other stuff. All right. First of all, this is the Nasdaq. We're looking at the Nasdaq. We had a recent drop, as you may know, like real bad sell-off. I was expecting actually a pullback, but not as fast as the one we just had. Where do I start from? There's so many things to talk about. One thing actually I want to mention is so you always want to stay in touch with the market and see what's happening. As you may notice, like we've been trading in this channel for a while, and if you notice in these pullbacks, every time we kind of hit the top of that channel, in here, like right in here, we come back and pull back, and we always respect that 21 moving average, like here, then here, then here, and then even here actually we kind of stayed right on the top of that channel, and eventually had an engulfing candle and pulled back again. So you always want to, market's always, structure is always changing, and you want to stay aware with that. And I want to share with you is when you keep looking at the market and what's happening, you kind of notice stuff that majority of the time, like 80% out of 20, not all the time. There's no such thing in the market that's a rule or a strategy or an edge that's gonna it's like a black and white that it's always gonna work for you. You always have to fluctuate, and then there's always like so many certain rules. As you may know, like when the more experience you get in trading, the more simplified you're gonna get it with your rules, but you're gonna have like a bunch of rules instead of just one. There's some fundamental rules that you always keep in and you don't even touch, like your risking rules, how much you're always risking a trade no matter what, and what is your entry, what is your sometimes your exit might have, like instead of just one, you might have like two or three. Sometimes you will have like a breakout entry, for example, but once a stock goes into your favor, once you hit like a certain percentage on gains, you want to take some of those gains, and sometimes you will have the market just blow off top and you just made 5 or 6% in that trade. Then usually you take your gains if your stock gets like 20 or something like that. You be like, you look at the market and you see what's going on, like here from the Nasdaq, and then you see a structure that it's like that. Let's say, for example, like you just put in a trade and you're up like what do I say, like 5 or 6%. Like what happened with me. I had a trade. Actually, I'm still on. I got in right in this area on the EABD. And then let's say sometimes I take profit. Just an example, I take profit when the stocks keeps grinding 15% and higher, and I take some of the strength, and then stock just broke out in here and just took some time off to consolidate. Again, it broke out, and then it broke out again here. You'd be like, okay, the stock is fine, nothing's happening. But when you look at the market, let's say you're up like right in this area, or you're up like 6 or 7%, for example, and you look at the market structure, and then you notice that your stock actually, like EMD, is one of those Nasdaq stocks, and you'd be like, okay, everything's fine, everything looks good, and you still didn't take any time any profit on the sprint, and you look at the Nasdaq here, you'd be like, okay, we're far away from that 21 moving average, and as you may know, stocks and indexes, they don't like to get away from that home base. I call that a home base, from that 21 moving average. They always like to get back to it. The furthest way it gets from it, that it's like a rubber band, they will snap back to it. And then and you can notice sometimes, again, look at the space between the 21 moving average and the price itself, like right in here. Look how far is it away from here. And if you notice back in this time here, like the space was even smaller Like I'm talking about this space right here. Like it always wants to come back and touch home base and then go from there. So you always want to keep in mind what's going on in the market, and then also again your stocks. So again we moved up like far away from it a little bit here, so we have to snap back and come back. Every time we get stretched, we have to come back. To be honest with you, like when I saw the stock, when I saw the index was a little bit extended, I was thinking that it was gonna since it did challenge this channel, I was thinking and it was like a little bit consolidating a little bit here, and it did broke out. I was thinking we're gonna have a new structure like out of this channel that we had in here, and actually we didn't. I mean, we did push up higher, but look again, that space, like we can't just keep going grinding higher away from it. It has to snap back sooner or later. I mean, I wasn't expecting this pullback to be really as fast, like in 2 days, but I was expecting it like in a week or two, but that was like too fast. So like what I want to say here is like always be aware of the market and what's going on around you. We had the Nasdaq was away from the 21 moving average. We snapped back. You look at the IWM, we had some down days, but actually the IWM, it wasn't that far away from it. Like only, I think when was this? It was back in mid-August. We went away from it and we came back. Even those down days, they weren't as much. So if you're like owning stocks in the IWM, I would say you really didn't get that. You didn't get hit as much as the Nasdaq. We look back and the SPY. Look how way we were from that. Look at the space again from there to here. You know, so these are things like you want to be aware of. Also the VIX. If you're looking at the VIX, the market volatility index back here, as you may know, the VIX, every time the stock market goes up, the VIX goes down, and vice versa. And if you keep close attention to what's going on, last time here on the VIX, we had actually a flag right in here, right in this couple days. We had almost a reversal candle right in this day, here, that day, and then we actually just flagged for 2 days. We didn't do anything. So that gives you another confirmation that hey, the stock market is up to like a pullback. So you add this right in here to the Nasdaq, that it's always away from the moving average. That space, that gives you a clue that hey, let's cut back on my stocks. Let's take some profit and then see where we're gonna go from there. So that's what the pros actually do in this time of the strength. Instead of starting a new position, you can start a new position, but like if you're aware of these things, if you're like, okay, let's wait a little bit and wait for that pullback and see for a new setup. So if you have stock that were in strength, you take some off. You know, you take like half or whatever you want to do. So these are the kind of things I want to share with you that I looked at and I experienced back in years, and it just keeps repeating itself over and over and over. What else I want to share with you? Yeah, I did tweet last time that in this time pulls back like that, instead of getting scared, actually you want to go back and look for stock that are strong, that didn't get hit as much. Like for example, actually this is like a homework for you. You have to do it. You still have like a couple hours to do. Go look for 52-week high. Go look for stock that didn't get hit as much. Look for the stock that closed green. It will give you an idea on the next leader that we're gonna have from this time off, from here. As you may know, I don't think we're gonna crash. That's my opinion. That's what I'm leaning on. I think this is like a pullback, and this is a flush, and then so many names that needs to set up, because we've been grinding for so long. Then we need some time off. I'm not leaning toward bearish. I'm leaning toward more consolidation here, and then we might have some down days in here. So yeah, I wouldn't get too bearish. I will just go light on my positions and wait for new setups and look for strong names that I just said. We might have, if I split the Nasdaq, if I put it on the intraday, on the hourly, You might see some let's take this off. You might see some lines that I draw that we might have for the next time, for next week to trade starting tomorrow. These actually are support and resistance. We have a gap in here that might be a magnet for the market to come back and fill. I'm always flexible in my trading. I always can hit back down, we'll break below that level and go back down. The reason why I said that is because all this time, as you may notice here, this is the hourly, just so you know, we've been grinding higher, and then actually what we've been doing is just support. We break the resistance. We break resistance. Let's take this off. We break resistance. We have support and resistance. We break it. We come back and retest it and bounce right back from there. And you can see it. It's not going to be perfect, but we had a support and resistance in here. We broke it right in here. We went back. We actually topped right in here, and we came back to retest that resistance and even fill up some gaps. And you can notice all these lines that I've been doing. Actually, they just support and resistance. We have gaps in here on these circles right in this to fill up, and then we came back again, challenged that all-time high in here that we had here. We broke it and then fill this gap here, and you will think the market's gonna crash from here, and we'll reverse. I said this so many times, always have your mind flexible. Look for clues of what the market's giving you, like reversal candles, for example, things like that. And then since we broke here, we just consolidated and we ran quite a run. And then so this is the blue line, is that previous resistance that we had. And look, we came back when we crashed. The last 2 days we crashed. We came right back to that, not right back to it, but we came to that value area, and then we stopped, and then we reversed right back higher. So yeah, always put back and sit back and look at the market from different perspective. Look at the 4 hours. I like to look at it from the hourly. I like to look at it from the 4 hour. I like to look at the weekly. I like to look at the monthly. I don't look at the 5 minutes and 1 minute candles and all that. The lowest I can go is a 15 minutes sometimes, but I base my decision based on the weekly and the daily. But when I like to get into the stock, I like to look at the daily. So yeah, go back, look for stocks that are holding up, that closed green or broke all-time high. I will give you an example, but this is going to be like cheat sheet. But I want you guys to comment, and if you do your homework, put in a comment below and tell me what kind of stock you found strong or closed green or closed above the 50 and the 21 moving average. I'll give you one of the best stocks I've found so far is DAR. Look at it right in here. We'll go out to the monthly, see what's happening in the stock. Actually, so there is no previous resistance to the left, which is good. And then from there, I'm gonna zoom back to the weekly, and then we have almost like a cup and handle. We broke out right in there, right in this candle. Okay, which is good. We consolidated right here. This is all on the weekly, and then we went up higher, and then we consolidated again. Then we just broke out. We'll look at it on the daily. That's exactly what happened. So the strength on what I just said. Look for stock that's been doing good on those last 2 days. Look at DAR, for example. Market sold off the last 2 days, but look at what DAR has been doing. We had a down day, reversed right on this day, and then instead of going down like what the market did, because if you look at the Nasdaq and what candle it did, it's like a reversal candle right here. We closed barely right above that 21 moving average. You look at Facebook, you look at same candle, you look at Amazon, all the big blue chips, same candle. You look at Google, for example, see, almost the same thing. You look at one of the leading stocks, COUP, some of them did even worse. So, and that tells you, that gives you an idea on if the stock is strong, or is it breaking down from there or not. when we look at DAR, when instead of having that reversal candle, we have a breakout candle on all-time high and on a volume. And look at that relative strength line on that blue line. Look at an all-time high. You can look at it that way, look at it that way. Anyway, the stock is strong. So yeah, so this is actually your homework. This is what you have to do. And when on times like that, again, when before we had, if we go back to the Nasdaq, before we have this massive over 30% correction, and we had a follow through day right in here. Yeah, if you guys don't know what follow through day is, it's actually it's been studied, that it's been done by the IBD William O'Neill. And they found out that they actually flip their biases once they have a follow through day. You have actually a low, and then you have that follow day right on this day. Actually, it was April 6th. They switched their biases from a correction to an uptrend. If you look back on this time right in here, on this follow day through, and if you look back on if you were looking at this time on stocks that been grinding either higher or moving sideways, as you may know, stocks that go sideways while the market is going down, those actually are strong stocks. Those are going to be leading once we have that. Once the market confirmed that wants to go higher. If you look back on that time and you were looking at LVGO, here, this is the time we actually start crashing back in 24th. What is 24th? Right on this day. Right in here. So the market crashed over 30%, and look what LVGO was been doing this time. It went down, but not as much. Market bottomed at March 23rd, and LVGO bottomed on the 16th. And then since then it was just going sideways. What does that tell you? It tells you want to follow this stock, because most of the sellers here, they don't want to give as much of their shares. And then from there, it just flagged. We went up, we moved sideways, and we had a breakout right on this day. And this was April 6th. This was the follow through day. And I guarantee you, everybody was in here. Everybody was scared, and including me. Like, it was like I have to confirm that. Hey, are we gonna go up? Or are we gonna go down? Are we still in correction? Are we gonna crash more? But if you have rules like a follow through day, and you see that follow through day on Nasdaq and the SPY. I think the SPY was in it was this day too. Yeah, it was April 6th. Yeah, all of them, majority of the indexes were April 6th. You look back, you're like, well, this stock is actually moving higher, and it was actually not all-time high, but hey, it's been consolidating, and we're breaking out. When actually on a volume day, right in here. And then that tells you that this stock is going to be a leader. And you know, LVGO, man, it was insane. I got in this day right in here. Yeah, so you had to have you have to have flexibility in your mind. You have to switch your biases. Once the price action starts showing you that the stock wants to do something different, why are you gonna stay bearish or bullish? I'm not bearish, I'm not bullish. I'm just following what the stock is telling me what to do. I'm gonna set a stop loss, whatever percentage you're comfortable with. I'm comfortable with 3 to 5%. If I can do less, it's even better. I don't like to go above that. And then set your stop loss. You don't have to go all in. You just put a little bit to just test the water. Put a little bit of money in there, and just test it. If it works, it's add. Once the stocks, once you start finding that more stocks are starting up, now you start jumping little by little. So this is what I learned from my last experience. Yeah, so that's what I want to mention actually. LVGO right now just in that 21 that 50, which is actually solid. You want to see that. It was the same time that it happened here. This day everybody was talking about stock rotation. Everybody was afraid so many people got flushed out. Actually, I got in right in that day. I put my stop loss right below it, and I followed it all the way. I got some into the strength. I got some pulled out some of the strength, and And then I have like so many selling rules. Like I said in the beginning of the video, you don't with the more experience you get, you're not gonna have just one rules of selling. You can follow the stock. You can follow the every time the stock makes a low, you follow it right in there and there. And if you trend in the stock right here, you'll still be intact. But once you start, I believe once the LVGO close below that low, I think it's gonna more low price is gonna be more low price is gonna be ahead. Yeah, so that's the first thing I want to talk about. And again, one thing I will encourage you to do: go back and look at the let's see, look back, study the previous chart, man. I can go on this video for like hours, man. I just don't want to do that. I can do that. If you guys want me to do it, just we can study some price action and tell you. This is back in 1993, 94. I like to do that and see what's happening. How do I flex my biases? We had a breakdown on the 50 here. What do I see? How do I go from here that it's we're bullish? I mean we're bearish. We have that 50 as a resistance to bullish that we're gonna go all-time high. How I usually, what's my process? Well, I can do that, but I'm gonna be talking here for hours. Just yeah, if you guys want me to do that, just comment below, give me some support, show me that you guys want to learn, and I'll do that next time I make a video. What else I want to talk about? Yeah, so one of the stocks I'm actually in right now is I think is what stocks I still have. Yeah, I told you I still have EMED, and I have PPD. I still own actually PDD, my bad. I still own it. You guys might know I don't like to own stocks below the 50. This stock's been showing me strength. It didn't give as much back. This is a new IPO. It didn't give as much back since the breakout from here. I got in actually on that day, on the 26th. I got in. I put a stop loss right below it. I got flushed in. I sold some into the weakness, so my stop loss was right in there. I still own some of it. I was watching it if the stock was gonna close right below that reversal candle right there. It actually did hit it, but it didn't close below it. I always go by the close. But once it, like I have like two stops. The first stop was that day, the low that day. I got hit first time. It was like 2% loss, so I'm still okay with that. And I was waiting for it to close. If it would have closed below that that reversal candle, I would have just get out. And another thing that gave me the conviction that the stock is still good, because that happened to me back in Chewy. Chewy, I got in right on this day, right on bounce. If you look at the stock, has been respecting the 50 moving average here and here and here, and I got in that day here, and I once it did close actually that day, I got out. I got flushed out right in here. It didn't close below it. The low of this day actually was 45.60. So sometimes I give a couple cents a little bit below 45.60. This is 45.96. So I would have still been in. So that comes with the experience. Sometimes if you ask me why you still in a stock if it's still below the 50, well, sometimes the stock doesn't give you that like a good candle like that right below the 50, you know. So it wasn't there. Sometimes you just like a 50-50, like, hey, the stock, it's still actually, it's consolidating. It really didn't close below that reversal candle. And yeah, so I got out right in there, and then it was actually good timing, and then the stock just moved over 20%, came back, retested that previous resistance, and then it bounced right back from there. So it was so I learned. So I'm thinking about the same process when it comes to PDD. When I look at it on the weekly, it's a whole lot different story. We have actually that reversal candle. Actually, it was right on this day, this week. Actually, this is weekly, and I'm waiting a close below that candle. And once it closes below it, the whole pattern will be invalid. I'm talking about this pattern. We have a digestion in price in time, both of them. If you don't know what that is, go back and see one of my previous videos, and I talked about it and I did explain it. So we have a reversal candle, and then we never, as long as we're not closing below that reversal candle, we're still fine. And usually it takes about 5 to 6 weeks for a digestion. It can go more than that, but usually 5 to 6 you will see the stocks keeps going up higher and getting close to the all-time high and then break from there. So that gives me a conviction that the stock still wants to go higher. It doesn't want to go lower. The low of that candle is 77.53, and the low of that candle right in here, it's 82. This is the daily. The one I just said, it's the weekly. So for me, 82.54 is the price. We went below it, but we closed above it. The stock just reversed up higher and closed it on the upper half of that candle. So that gives me confidence that, hey, stock wants to go up higher. I try to fill up this gap right in here, but it came back with the sell-off. But I can be bearish, I can be bullish, I can switch my biases quickly. I just want a feedback from the stock, and I wanted to tell me when it wants to do. It closed below here, I'm bearish. It wants to go up higher, it will reverse back the action and then consolidate and break all-time high. That's simple. So yeah, I don't want to make this video too long. It's already over almost 30 minutes. Like I said before, if you want me to talk about those previous NASDAQ chart before, I can do it. It's going to be a little bit longer video, but it will be more beneficial. If you want me to do it, I can do it. Just give me some thumbs up, leave some comment, tell me you want to learn a little more. Do some homework today. Look for stocks that closed today green or broke all-time high, like the DER, the one I showed you. There are some more other stocks. I want you to, if you do some homework and find them, there's actually 2 that I found that actually showing strength. You can put them in the comment, tell me which ones. And that's it. I hope you guys found this helpful. Give me a thumbs up if you find it, if you like it. Subscribe if it's your first time watching the video, and I hope you see you guys